So let's get started talking about Japanese candlesticks. Now, before we move on farther, I'd like to note that if you notice on your screen, there are 3 handouts I've put together for you. One is the candlestick cheat sheet. That's simply a JPEG of all the different candlestick patterns and an explanation of which, in what category they fall into. You should keep that available on your computer until you've mastered all the different types of positions and candlestick patterns. I've also given you 2 ebooks. The basic one, the most important one, is the ETX Capital Technical Indicators Handbook, and also the ETX Capital Forex Strategies Handbook, which explain strategies and technical indicators you can use in conjunction with Japanese candlesticks. Now, candlesticks are just a form of charting developed by Japanese rice traders in the 17th century. Okay, so they've been around a very long time. They weren't developed for the financial markets. They were actually developed for rice trading and to calculate whether the supply and demand, and the price for rice would be higher or lower. But these candlesticks have become very, very, very popular since the growth of online trading. Now, when I started trading 45 years ago, first of all, there was no online trading, so there was no people like you guys out there trading. It was all professional traders, either trading for a brokerage or trading their own accounts. But everything was done by hand. There was no internet. So we would sit there with our binders full of our graph paper and the assets we were trading. We would be hand charting, waiting for the numbers to come out, and we would be drawing the lines or bars on a chart. So most of us use bar charts because bar charts were very easy to use because you just put a line and the bars on it. Candlesticks were quite complex when you're drawing them by hand. And they're very time consuming to put on chart after chart after chart. But with the growth of online trading and computerized and HTML and Java charts, all the online traders have gone or jumped to candlesticks. I'm even using them more than I used to use them because I was a bar chart trader. Now, each candlestick on a chart tells us something about the market. Now, a candlestick has very little to do with the green and red. The candlestick is all about what's called the body of the candle and what's called the wicks of the candle. These bodies and these wicks are the open, the high, the low, and the close for that time frame that you're looking at. So now we're going to use a 1-hour chart. So what we do is at the beginning of the 1 hour, we would put a dash across at the open price. At the close of the 1 hour, we would put a dash across at the close price. We would then put a dot at the highest price that asset traded at in that 1 hour, and a dot at the lowest price that asset traded to 1 hour. We would then connect the lines to each other, and then the lines to the dots. So these are called shadows or tails, and these are called the body of the candle. Sometimes these are called also wicks. Now, if we step down from the open to the close, that was a bearish session, and we would color that candle in today with red. If it was a bullish session, in other words, we stepped up from the open to the close, that would be a bullish session, and we would fill in the candle with green. Now, we have to understand that when I was talking about charting 45 years ago, the people using candlesticks didn't have the time to fill in. They didn't walk around with colored pencils and magic markers and everything else. And So we had black and white in those days. And if it was a bullish session, we just would leave the candle hollow. And if it was a bearish session, we would fill it in with the side of our pencil. So we'd have a black candle. Okay. So a lot of the time that you'll hear about talking about candlesticks, you'll hear them referred to as black and white. Or some of the patterns are called 3 black crows, 3 white soldiers. But the fact of the matter with a candlestick is it doesn't matter whether it's red or green. You could use orange and purple. You could use pink and blue, as long as you know which one is bullish and which one is bearish. So if you decided you like orange and chartreuse, you can make your candlesticks orange and chartreuse. Now, once we look at a candle, we have to understand that candlesticks have very little to do with the black and the white or the red and the green. They have to do with what the story is being told by the shape and the size of the candle. And it's the length of the wicks and the size of the body of the candle. After that, we then are concerned with the position, okay, or what was the preceding candle and the post candle. Because candlesticks are not about the abundance of green or red on your charts. Now, the first thing that candlesticks tell us is who's in control of the markets. So these are the 6 basic patterns you can get out of candlesticks. Now, here we see a long bodied candle with balanced wicks. Now, what this tells us is this is a bullish candle. It tells us, when we look at it, that the bulls were in control of the market. The bears were able to pull it down, but they weren't able to hold on to it. The bulls were able to run up a little bit higher. The bears pulled it back, and it closed higher than it's open, and the bulls are dominating. 2 is just the opposite. Now we look at 3, 4, 5, and 6. These have very small candles, very small bodies. The bodies of the candles tell us there was very little movement between the open and the close. That is telling us that there's a lot of indecision in the market, and really nobody was controlling the market. Okay? Even though it was a little bit bullish, a little bit bearish, nobody had ultimate control. Now we can see in 4, some point the bears were able to pull that price way down, but they weren't able to hold on to it. At the end of the session, it closed just about where it opened. So if you imagine this is tug of war, and one side of the river, the guys yanked really hard and they pulled a couple guys in, but then those guys got their footing back and pulled the other guys in. At the end of the 1 hour, everybody was back where they started. But understanding who is controlling the market is very, very, very important. And candlesticks tell us who was in control of the markets. Now, the shadows or the wicks also give us some information. Upper and lower shadows on candlesticks can provide some valuable information about the overall trading session. But then we come to very distinct candles that are unique, and they have definitions unto themselves. So we're looking on the screen right now at something called the Marabuzu. The Marabuzu, you can see right away, it looks a little bit different. It'll take a second for your eye to be able to tell what's happening, but it has no wicks. So what that's telling you, when we see the white or the green Marabuzu with no wicks, that from the beginning of this session all the way up until the time ran out, so we're looking at 1 hour timing, that from the very beginning of that 1 hour to the very end of that 1 hour, the bulls dominated everything. There was never a second that the bears were able to pull that price down. And at the close of that session, the bulls were still in complete, utter domination. So what's that going to tell you? Most likely, when the next session, next hour starts, it's going to continue up because it has a huge amount of momentum. And then we have the reverse with the black Marubozu or the red Marubozu. But to understand what that Marubozu is actually telling you is you have to look at it in the connection to the trend. A green Marubozu or a white Marubozu appearing in a uptrend, I'm sorry, at the end of a downtrend or in a downtrend tells you it's about to reverse and become an uptrend and it's going to have a very strong uptrend. So it can be a continuation of the existing bullish trend or a reversal of the current trend. And then we have spinning tops. Spinning tops look like those ones that I showed you had indecision. Spinning tops have wicks up and down and a small body. They're telling you that nobody's in control and there's some indecision in the marketplace. But then when we want to talk about indecision, we go on to what's called the Doji. Now, spinning tops and the Doji look similar. Now, the original rule for Dojis was this. And that was the open and the close had to be exactly the same. What that tells us is that the markets are completely dumbfounded. Now, it's been modified because of online trading, and now that we're dealing with prices all the way over 4 digits to a pip and Forex trading, that it's very rare that you're going to get the euro that opens at 113.47924 and it closes at 113.47924. But if it closes at 113.4925, that's 1 pip difference. It's 1,000th of a point, but it's not exactly the same. So the Doji can now have a very small body. Because back in the days when the Japanese rice traders, or even when this was modified for the financial markets, we were mostly looking at stocks and commodities. And since we weren't getting data that fed that fast because we didn't have computers, things moved a lot slower. But now a Doji happens all the time. But we have to look at a Doji in comparison to where it's appearing on a chart. Because a Doji, they happen often, so does spinning top. And we have to look at where they appear in connection to the current trend. But one candle by itself very rarely tells you anything. And we have all kinds of then ornate things from there. We have dragonfly dojis, which are no body but has a huge tail down, or gravestones, which has a huge tail up. They're just names given to the different variations of what could happen. So I've got a little presentation that I'm going to run for you on the introduction to candlesticks. It'll show you this a little bit better. And then we're going to go on to talk about the different types of patterns that candlesticks make. So as you can see, there are many different ways to use candlesticks and a lot of different patterns that tell you something about a candle. But now that you have a basic idea of what candlesticks indicate with their bodies and their wicks, let's cut our teeth on some simple and uncomplicated candlestick patterns, which he showed you in the video. Now, also in that handout that I gave you in the cheat sheet, there are explanations and information about these candlesticks, these patterns. Now, there are single, doubles, and triples, and they're all about where these positions, these candlesticks are positioned. So we have standalone candles. These are single candles that will appear at some time. We have like the star position. We have shooting stars and inverted hammers. Now, you're not going to learn and master all these in one night. In fact, you're not going to learn and master all these in quite some time. But you should be aware of them. Now, also in a minute, I'm going to show you some ways to very easily find these, because a lot of people get freaked out because they say, I can't remember all those funny names and I can't remember all those patterns, and it's just too much to handle. And it really is. You know, you can decide you're only going to look for certain patterns. Okay, I only have a couple favorites that I look for. I don't pay any attention. I don't look for hammers. I don't pay any attention to hammers. You know, you can't be an expert at everything, and not everything gives you all that information. Now, one of my favorites is called a Harami. Now, Harami is a single position candlestick. Now, a single position candlestick, like we just talked about evening star and morning star, and we just went past a couple hanging men. These are single candlesticks. Okay, so they appear a great deal. Now, a Harami, though, is a little bit more distinct because it requires two candles and it is very, very specific. Okay, a Harami, or Harami in Japanese means pregnant. So what it means is the current candle must be fully incorporated inside the prior candle. Just like a pregnant person or a pregnant woman, the new candle, the baby, has to be fully incorporated inside the body of the parent, the mother. Okay, not all the way to the top, not down or at ankles, but inside the body of the candle. Now, to make this definition a little bit finer, because there's only two candles, and they occur quite often, is the new candle has to be the opposite color of the previous candle. Now, when these appear, you should pay attention. A Harami is one of the most common candlestick patterns you'll come across. So it's important to recognize it, to understand what it means, and to understand its limitations. A Harami is a two-session reversal pattern. It's made up of two candlesticks and implies that the price is about to turn. It is indicated by a small body of the opposite color, completely contained by the body of the previous session. It is not essential for the two candles to be opposite colors, but this tends to give them more reliable signal. Okay. Now, like I told you, it's not about the reds and the greens. It's about the positions of the candles. Now, the chart I've just popped up there, I didn't make up this chart. I didn't call them Lonesome Cowboys, 2 for Tango, or 3 to Musketeers. But all of us have the single, double, and triple candlestick patterns. So we talked about the Marabuza, the Doji, the Hammer, the Hanging Man. These are single candlestick patterns, and that occur quite often. And you should be aware of them. They might help you understand price, but they don't tell you anything more advanced than that. Then we go to our two candlestick patterns. And these you saw in the little presentation, bullish engulfing and bearish engulfing. We even have bullish tweezers and bearish tweezers. From there, we go to 3 candlestick patterns. These triple candlestick patterns are very reliable because it's very rare that they actually pop up because it takes 3 candles to, exactly the same as what the pattern calls for and to tell you something. Now, I've given these all, and they're all listed on your cheat sheet. Okay, don't have the time in the evening to go through all the individual candles step by step and show them to you, because we want to get a little bit past these. But there's the ones, remember I mentioned earlier in class, 3 white soldiers, 3 black crows. These could be 3 green soldiers and 3 red crows, but the black and white names came long before we had computerized charting. Then we have the 3 inside out and the 3 upside down. Okay. Now, once you've learned all these patterns, it's time to move into action. Now, when you have gone through various candlestick patterns, either you're ready to go to the trading battlefield with your newly acquired knowledge, or you want to shout, "Stop, I am too confused with all of these funny names and shapes, and I can't remember any of these." Now, remember, each candlestick is simply a reflection of current market sentiment. But let me pop up some live charts and let's take a look at what this is in real life, because I want to show you some interesting things before we go, especially on candlestick math, which is a new way to use candlesticks. And I want to share with you some other ways to actually apply it to your trading. So here's a candlestick chart. Now, you could say to yourself, well, all of that's too much. How am I going to ever find these in live charts when price is moving and everything's happening? There are ways today, because we have these computerized charts, that make it a lot easier. There's scanners out there. There's programs. There's scripts. So here we're looking at trading view charts. And if we just go up here to indicators, and we come over here to scripts, and scroll down, we can see here candlestick patterns identified. Just click on it. And it's just like an indicator. It added, now what we have all over our charts, we have every candlestick pattern that's ever that's come up on a chart. Well, this is too much. It's mind-blowing. It's too much on a chart. But you can customize it. So you don't want to see evening star, morning star, shooting star. You decide which one's important to you. And so we want to leave on Haramis. I want to leave on the bullish and the bearish engulfing. I don't care about piercing lines and bullish belts and bullish. And we're just going to turn them off. We don't care about hanging mans and dark. Okay. Then we can also decide how we want it to appear on our charts. We can decide we want it above or below the price bar. We can decide how we want it. We can say just want a diamond. We can decide, if we want the writing in red or green or purple. We can just put it in purple for each one of those different patterns, and then it will appear on the charts the way we've set it up. Okay, so that makes life easier. Okay, so that's one way that you can at least get them and see where they've developed and where they are. Another way is with a scanner. Now, for instance, if we go to investing.com, they have a scanner that's free to use, or you can download them all over the place, or you can put them in an app on your phone. But see, here we go to candlestick patterns on investing.com, and I want to customize. I can pick 8 assets I want to watch. I can decide if I want second level or third level candles, whether 3 patterns, 2 patterns, whether I want bullish, bearish. I want patterns that have completed, or I want them when they're just starting out. And I only want patterns for the 15-minute chart, 20-minute chart, 30-minute chart, 1 hour. I don't care about monthly patterns. Okay, we pin our assets, put on apply, and lo and behold, we can see right now in Apple on the 1 hour chart, we have a 3 inside up, and it's just developed at the last 3 candles. And we can open this line up and see exactly what is going, that is. Or we can also go over to the actual Apple chart. In this case, I've got the euro popped up, and click on the euro, and it's going to put those right directly on the chart that we're looking at. And we can see, so we pop up, well, I don't even know where to change the asset right here, but it's the same thing. So we pop it up and we can see the pattern right on the chart. And then we can carry it over, because if it's appearing on one chart, it's going to be appearing on all charts. There's nothing unique to investing.com and nothing unique to TradingView. All the charts in the world will have the same pattern because it's all the same prices. Okay. So we have it here and there. And here we can just put our mouse on it and see exactly what's happening with each of the patterns. So here we have a shooting star, gap, bearish, reversal, just happened right here. So you don't have to spend your life tracking these down and seeing these in the charts. I have the same problem when I'm using chart patterns. Like, I never see a wedge developing. I very rarely see a pennant or a flag. I very rarely ever see a head and shoulders. So unless somebody points it out to me. Now, triangles, because I trade with triangles, I see them all the time. So your most popular candlesticks you trade with, or the most popular patterns, you'll see them developing. The single candles you see. But this is one way that you can actually add this into your trading without freaking out. Like I said, again, in the old days, when we were hand charting, we were only, I traded 3 or 4 assets. I only traded agriculturals, and I only traded, at the most, was coffee, orange juice. I only traded, liquids. And that was all I traded in the agriculturals. That was it. Because that was all that you could possibly keep track of, get the data on, because we didn't have all this internet feeding stuff out to us, feeding economic events and reports and giving us charts, and the market was moving. So today, most of us, though, because we're doing online trading on a CFD chart, on a CFD broker like ETX, we're looking at 20, 30, 40 assets. So you need to be able to work much quicker. So this is one way to incorporate these directly on, and you can then put these right on your ETX chart. Okay. So either way you want to do it, these are just 2 simple ways. Like I said, you can download scanners, you can add apps to your phone. There's all types of ways. You even have notifications where they'll just pop up on your screen and tell you, this asset has done this. So these are some of the ways you can incorporate candlesticks into your trading in an easier route. So there are many ways to trade with Japanese candlesticks, and the best is in combination with other indicators such as pivot points and support and resistance. You can trade with candles, and I'll give you some guidelines and a set of rules that I follow. But what I want to do is, we talked about what I use. I want to share with you a couple presentations I prepared that'll show you how to incorporate candlesticks into your everyday trading. So let me put this up and run this with you, and then we'll come back to talk about a little bit more about, because I want you to learn about candlestick math, which is a new way of using candlesticks in a very easy new fashion that works very well. Okay, I want you to learn about candlestick math. So let me share this more specific presentation with you to show you how to use candlestick math. And then we're going to get back on to looking at trading with candlesticks. So as you can see, candlestick math can be an interesting way to build or use candlesticks in a new format. Now, candlesticks math has been around for, well, I don't know, 8, 10 years. It's growing and growing and growing more in popularity, where people spend less time looking for specific patterns and try to use the math to interpret what price action's trying to tell us. But whatever trading timescale you're working on, candlesticks can be an incredibly powerful trading tool for helping us to judge what's coming at us right from our trading screens. So I've really only scratched the surface of candlesticks because there's no way in 1 hour. I mean, we used to do a 3-week session on candlesticks for the introduction, but there's no way in 1 hour I can get you that familiar with candlesticks that you can be using. All I'm trying to do is give you some ideas and some information. Okay, so there are many, many more patterns that you can learn to recognize. However, the patterns I've chosen to include are the ones that I find most useful. Now, I'd like to add a word of warning. Spotting candlestick patterns can be addictive. If you know every possible pattern, you'll start to find them everywhere. And I've mentioned to you earlier, I only look for specific patterns. I've tested them. They mean something to me. I've incorporated them into my trading. Okay. You don't need to look for everything and anything. But remember, candlesticks by themselves are not don't tell you to make a trade. They give you information about price, but they should be incorporated with other pieces of information. Okay. And you can lose sight of all the other technical stuff and get lost in your candlesticks. And that would be an error. That would be a terrible mistake. Okay. But like I said, adding them in, and now today with scanners, downloads, things like investing.com, you have easy ways to incorporate these in to your trading. All you have to decide what is relevant to you, what patterns are important to understand, and then let the scanners find them for you. So on that note, I'm going to say goodnight to everybody. Thank you very much for joining us, and we'll talk to you again next week. And watch in April. We have a whole bunch of new classes opening up in April, and we'll talk to you again real soon. Good night now.